On today's video, I'm going to show you a trading model where your focus is only on the current day. You don't need to go over last week, last month, last year to find out the direction of the market and also to find out exactly what's going on in the current day. You only need the current day to find out about everything that is happening in the market right there, mainly on the 15-minute time frame. You can add 4-hour time frame there and there just to map out an entry, but the idea is on the current day, mainly on the 15-minute time frame. So if that's what you're interested in, welcome to the RFT Airlines.
Welcome to RFT Airlines.
Now we are here on the red price chart for the Nas100, and this is the current day that we're going to focus on. As I mentioned, that our main focus is simply on the current day. Now we simply forget everything that's happened in the past in terms of the price section. What's happened last week, last month, and last year doesn't matter today. We simply forget all of those things and then focus here on the current day. I'm going to show it to you in different examples so that you understand very well what am I talking about. And this is applicable on the Nas100, US30, and BTCUSD. Right, let's get into it. Now here we already have 9 and 15 plugged in already. Now what's 9 and 15 do in the market? What are we doing here exactly? We are finding the direction of the market, as you can see right there. We are finding the direction of the market that we are going to take at the right time. Because you can't look for entries at the right time without finding the direction of the market first. You've got to know where we are going in terms of the direction of the market, whether we are going to take a buy or sell on the other side of the market. So two things that we are looking for here between 9 and 15. We are looking at the market if it gave us a continuation or a reversal right here between 9 and 15. Continuation or a reversal, right? Now we are on the blank page right here. On the blank page, I'm going to show you two things. Firstly, I'm going to show you the characteristics of a continuation or a reversal plus the variation of an entry on the other side of 1530. As you've seen that, like, we are looking for entries in the market between 1530 and the 1630. So that window is for us to find entries in the market, right? So firstly, let's start with the continuation because it is a bit straightforward and simple, right? Here we want to see the market open at 9 and pick one direction all the way to the upside. Then this will be a continuation. Now at 1530, what do you expect to see? We expect to see the market open and spike to the downside to take us into a trade from an entry on the downside with an intention of rising all the way to the upside. That is the variation of an entry. So firstly, between 9 and 15, we want to see the market pick one direction right here. And then when 1530 comes in, the market will spike either up or down. But since we know the direction of the market that we are looking to continue to the upside, the market sometimes it may try to play you by opening and spike to the upside with an intention of giving you an impression that it will spike up and then drop to the downside. Don't fall for that because you now know the direction of the market that we are looking to go all the way to the upside. We're only going to take it when the market will open, spike to the downside and rises all the way to the upside. That's how this thing works. Now, there's only one thing that you need to know or that you need to note before falling for a buy or a continuation right here at the right time. Always check the ADR, the average daily range. It will always guide you into telling you that is this buy still valid or is it still applicable? Can you still take it and continue to the upside? Because when the market has reached an ADR, the market is no longer interested in continuing to the upside. Two things will happen when the market has reached an ADR. The market will either consolidate or it will simply reverses all the way back down. You know, where you think that the market will open, drop, or spike to the downside with an intention of rising, but then it doesn't come back. It simply just open and spike all the way to the downside, keep on dropping from there. It will be caused by the market that has reached an ADR. So we don't need something like that. Reach an ADR means the market will no longer be interested in continuation from there. Just leave it and look for another opportunities. Now, what are the characteristics of a reversal? Reversal, we say right here, we want to see the market opens at 9, pick the downward movement right here, and then after that, we want to see the market go all the way to the upside right here until we get to 15, where everything is sealed from. Now, here's what is so important right here. Seeing the market open peak one direction to the downside, we want to see the market quickly oppose that movement that was given as from 9. And the market going upside have to match that first movement that was given right here, so that you can tell that yeah, this is a complete reversal, because sometimes the market can drop and rise a bit and stuck somewhere there, and then someone will think it is it's a reversal. No, it's not a reversal. Reversal wants to see the market open, opposes all this movement to the upside right here, and then it gets sealed right here at 1530, right after matching that reversal up, that's open from here. Then after that, at 1530, you're going to see the market open, drop with a spike. Sometimes it will be a combination of candlesticks that will be dropping, because sometimes the market can open at 1530 and drop, but it doesn't drop enough into your entry point. Then maybe there will be a need for another candlesticks that will help the market into reaching that downward movement from there before the market can rise all the way to the upside. But the general format of this, or the general rule of this, state that the market is open right here at 1530, drop, and then rises all the way to the upside, in line with the reversal that was given right here with the intentions of going to the upside. So that's how you map out a reversal as well as the variation at the right time 1530 on the other side. Now let's head over back to the real price charts with some of the examples, so that you will see exactly what am I talking about this, to do some applications of this. Right, now we are back here on the Nas100 real price charts. Now let us look at it and see what we have right here. Remember what you said, 9 and 15. Firstly, we've got the market that opened, pick one direction to the upside. And then I've seen the market quickly pull to the other side right here, down here. And then what it did, it matched that movement right here as from 9 that was given at first place. It matched it, meaning that movement going up has been cancelled from there. So, and then now we are looking for the market to open at 1530, to open, rise, and then drop all the way to the downside right here. Easy as that. You don't need another price action. You don't need an old price action to get this right. You simply need the current day's market condition as well as the market movement, so that you will see and know exactly what's going on. Here, look at it. Open, we rise to the upside, and then we've seen the market reverses all the way back down aggressively right here to cancel that first movement that was given. Then after that, the market matched that movement. At 1530, as you can see right here, the market opened, pick one direction to the upside with a spike, one pin, and then the market was down. Easy as that. Let's move on to another scenario so that you will see. Now we are here on the second example right here on the Nas100, and this example is for a continuation. The first one was for a reversal. Now let's get into it and see what's going on. This one, simple and straightforward. You do want the same thing. Open, you pick one direction right here until it gets sealed at 15. So this is for a continuation. As you can see, there is no signs of a reversal here. So with this one, this is where you are supposed to check now the ADR first before you can consider this as a continuation to the downside. Supposed to check an ADR first, then after that you can start to say the market will have to continue to the downside. So the ADR right here, I still remember the chart, the market was perfect in terms of the ADR. The market had not yet reached an ADR. So therefore, that's why here at 1530, you saw the market open, pick an upward movement right here to take us into our chart. That is when the market dropped all the way to the downside right there. Right after the market has opened, pick the opposite and then drop to the downside. Easy as that. You don't need to complicate this thing, man. You don't need to complicate this thing. You just have to look at it in the same way as I just told you. Let's move on to another scenario. So that here is a third example right here on the US30. Let's look at it and see what we have. Here we have the market that opened, pick the upward movement, and then the market halfway it matched that movement that was going up, and it even surpassed it all the way to the downside. And then right here, you saw another scenario right here that could have confused you if you didn't pay attention. This one Someone would have seen it as a reversal. It's not a reversal. Why? Because we said for a reversal to occur, we need to see this downward movement getting reversed to the upside. We need to see a new movement right here, opposing it, matching it up. But it didn't match it up. The only time where we saw a matching movements was when the market opened here, gone up, and then this one dropping, matched it, and even surpassed it. But then this one right here didn't match it up. It didn't. It failed along the way. So this was going to be a continuation. That is why at the right time right here at 15:30 you then saw the market spiking to the upside. Then after that you saw the market dropping all the way to the downside in this way. You don't need to complicate this thing. You simply do this thing over and over again. You repeat it. If the pattern or what I'm just showing you right here is not present in the day, move on to another instrument. Don't try to force a trade that is not there. So that's how you will be killing the banks easy as this.